Hi, Michelle Oddo here with the Oddo Group at Leader One Financial with TimOddo from the Oddo Group at Leader One Financial. You're not really part of the Oddo Group. You're your own group. He is the reverse team at Leader One Financial. And so you do reverse mortgages, right, TimOddo?
I do reverse mortgages, yes.
Okay, so I know my clients are very interested in understanding why would somebody do a reverse?
Okay.
What age group do you have to be? Like, what's the minimum age to do a reverse mortgage?
Okay.
And just dispel a couple myths first real quick. So first of all, why should someone do a reverse mortgage?
Why should somebody do a reverse mortgage? Well, first of all, it's for people that are 62 and older, right?
That was the second question.
Well, I know, but we need to start there. We have to start with the baseline.
I did them in the wrong order.
So you've got to be 62 or older. At least one of the borrowers has to be 62 or older to do it. So it's for semi-retired or retired homeowners that have probably 50% equity in their home. And the big idea behind it is it's a way to create more monthly cash flow, because Michelle, if you're 65 and you're not working as much and you still have some bills and you see how things going on, you want to create more monthly cash flow. You want to have more money, right? You want to have more financial peace of mind. And that's a really crucial time in your life to do that.
Okay, so when you said 50% equity, a lot of people won't know what that means. So give an example.
So if you own a home that's worth $500,000 and you owe $250,000, so you owe roughly half of what the home is worth, that would be considered 50% loan to value.
So then they could refinance that loan into a reverse mortgage and have no payment, no more monthly mortgage payment, correct?
That's correct. So one of the big misconceptions is that the bank refinances the home and they take over, and then when you die, when mom and dad die, then the bank gets the home back, and that's just simply not true. This is a home secured to the property where they refinance the existing loan. They put a reverse mortgage in its place, and they have no monthly mortgage payment. And then when mom and dad, when the borrowers live there as long as they want, when they pass away, the kids or the estate still gets the home. So whatever's left over, whatever equity's still in the home, still goes to the estate, not to the bank.
So when they do that refinance, the title stays in the borrower's name, not your name or the lender's name, right?
That's correct,
okay.
yes.
So the borrower keeps the home in their name.
It's a loan secured to the property. It stays in the borrower's name. The only difference is it's a flexible repayment loan. So it allows for the borrowers not to have to make a monthly mortgage payment.
Can someone buy with a reverse mortgage?
Yes, you can buy with a reverse mortgage. So again, it's kind of the same dynamic, only a little in reverse. So if you had a borrower who wanted to buy a $500,000 home, they'd have to come in with approximately $250,000 down, about 50% down, and then they would finance the other 50% in a reverse mortgage and never have a monthly mortgage payment.
Nice. Okay, one last question.
Yes.
What if somebody what if they only owe $50,000 on their home and it's worth $500,000? Can they still do a loan for $250,000? What happens with the rest of that loan? Do they get the cash? Does it sit in the house? What happens?
Yeah, great question. So right, if you have a $500,000 home and you only owe $50,000, so you have a ton of equity, then they still would qualify for a $250,000 loan. We'd pay off the $50,000 that they owe on the previous mortgage, and they would still have $200,000 left over, right? Mm-hmm. And with that $200,000, you can take that money in a myriad of different ways. You can get a monthly payment for the rest of your life. You can
like a monthly income payment.
Like a monthly income payment.
Straight, like a payment off of that equity.
Correct. Like kind of an annuity payment, if you will, a monthly income stream for the rest of your life. Most people would opt to put that $200,000 into a line of credit, and that line of credit then gives you a pot of money to draw from that's tax-free, will never affect your Social Security, and will never affect your Medicare.
And it grows with interest, correct?
And it actually it has what they call a growth rate.
You like all my prompts.
I think she knows a couple things about reverse mortgage. Don't let her fool you.
Yeah.
Okay.
I think it's a great loan. I really do. We've seen so many seniors' lives completely changed. A lot of times people spend their whole life building equity in a property, and then they feel like they can't touch it. So they've got this savings account shaped like a house with all this money in it. They don't have income to qualify for a mortgage, but yet they're starving. Their furnace is broken and they have no money to fix it. So that's your money. You earned it, you saved it in that home, you have access to it. A reverse mortgage is a great way to get access to your own money without making a payment and still having a good quality life, go on a vacation.
increase
Maybe
your
not a
quality of
vacation right now in COVID, but maybe
Yeah.
you want to get a camper and go on a road trip, whatever it is.
But I just showed you a client review from yesterday where my client, she said, "Hey, I can finally travel again. I can go spend time with my daughter in Arizona for a couple months at a time." And it really does. It's a life-changing loan, creates more financial freedom, and gives you more financial peace of mind. That's the
Okay,
big.
and one last thing, you just said daughter. You said something about her daughter. So if a client's nervous and they want you to talk to the family, I know you talk to people's kids all the time.
Yes.
And financial planners. So if they aren't sure and they just want to call you, talk to you, or they want their kids to call and talk to you,
Yes.
how do you feel about that?
Yeah, 100%. I love that idea. I think it's smart because this does affect the whole family. As a matter of fact, yesterday I met with a couple, and their daughter, one of their 4 daughters, was there, and she sat there the whole time. And I've been in conversations with her a bunch of times over the phone as well. But I definitely recommend that because it's part of the family decision, and I
Right.
welcome any family member to be there and to go through it with them so that they're comfortable with it and they can wrap their arms around it as well.
And my understanding is when we're 62, you'd like us to do one. Is that right?
She is going to do a reverse mortgage. She's 62. When we're both
I'm
62.
sure we will.
We will.
Um,
It's part of our financial plan too. It should be a part of more people's financial plan.
Yeah.
There's a bunch of myths and misconceptions.
It's not the loan of last resort. It's actually a lot of wealthy people do this as a planning tool.
As a
We see
planning
that
tool.
as well.
That's right, because you get an extra pot of money that you can draw from.
Tax free.
Tax free. You can just do a bunch of cool stuff with.
Yeah, cool. Well, thanks
Okay.
for joining us here on our video. TimOddo with the reverse team at Leader One Financial, Michelle Oddo with the Oddo Group at Leader One Financial. We would love to help you at any age with your mortgage strategy and plan. Give us a call. Thank you.